Hello guys, how are you doing? Welcome to Sammy FX. In today's video, I'm going to be going about market liquidity. What's liquidity all about? I'm going to be going about liquidity. But first, if you're new to this channel, please don't forget to subscribe, hit the notification bell, and also like so you'll be the first to know whenever we drop a video in this channel. Now first, what's liquidity? Liquidity is an area where money is sitting, where people's stop losses are, where pending orders are, and also sell stops and buy stops like that. Now you got to understand one thing about the forex market. Price is always being drawn to the money. Okay, now remember when I defined liquidity, I said where the money is sitting. Price is always being drawn to where the money is. Okay, that's what the forex market is all about. Liquidity grab. I know you might have heard of something like that, liquidity grab. Forex is all about knowing where the money is and going towards it. That's what the institutions do. They run out liquidities all the time. Okay, so let's dive right in so I can start explaining. Okay, let's start from here. As you can see, price is coming down. It came down to the zone here, and then we spike up. What did it do here? It just generated liquidity here. As you can see, there's a double top, there's a double bottom here. Always take note, as traders of institutional candles, we don't trade double bottoms, because why? This is what the price does. Sometimes they generate liquidity and they also run them out. As you can watch now, the market actually created liquidity here also, and it took high. Now where is it going to be targeting? See what they did here again. They generated more liquidity in this zone. Let me take this out. What did we see here? This is a double bottom. Price generated liquidity in the zone here and went up. What did they do? There's a double top here also. There's a double top here which brought out market down, and they round this one up. Money is actually sitting here at this zone, so the price went up and ran it out. And where would they be targeting? This zone here where there was a double bottom. So price is always being drawn to where the money is. I always say this: institutions run out liquidities before they go in the intended directions. In other words, they sell before they buy. Smart money, they always sell before they buy. Now, or they buy before they sell. See this scenario here where we know the liquidity is standing here. Liquidity is here. Liquidity is also here. Now, what did we see? There's also liquidity here. Some early sellers were selling at this zone here. Some early sellers, this is an entry. Some persons sold at this zone. But what happened? We saw the market went up and took them out. What did it end up doing? It created liquidity in this zone here. And all of a sudden there was a run out of price. The market actually came down and stopped out every other person that was selling at the zone. Now let's watch what happens. Now this is a peak. Some persons can be like, wow, smart money is here. Where's the money sitting here now? This is where the money is. And don't forget, we have some persons that entered late. The money is equally here. This is a double top. Like I said, guys, whenever I see a double top, there's always money sitting there. And whenever I see a spike also, there's money there. So where's the money? The money is here, and the money is also down here. So what did smart money do? We know the market is about to come down, but guess what? They bought to the upside. Generated liquidity here also. And what happened next? They sold. Now these guys have been taken out. They sold the market to the downside. These guys have been taken out, so the money is no longer there. Don't forget also they generated liquidity here. Let's bottom here. And what happens? They took out these guys. So eventually the market has been taken out, and you see another double top here. Guess what? We have another zone of liquidity here. There's a double bottom here. So there is something I always look out for whenever I want to get in a trade. I ask myself basically two things. Where is the liquidity? Where is the price sitting? Where is the money sitting? Where's the liquidity? Where's the zone? I don't just get involved in the trade when I'm not sure of smart money running out liquidity in that zone. Let's check this out. You see this right here? I'll spot out liquidity here. Price was generating liquidity at this zone. Guess what? They run out the money down here. I always say that price run out liquidity from the spike down or up, or the zone which is the double top or the triple top. This here it is the triple top. Guess what? We came down and generated liquidity. Two zones, right here and also here. This was the double top. This was the double bottom. First, this was the double bottom. Let me take this out first. This was the double bottom. Guess what? Price went up, generated more liquidity with this guys here. And eventually, some traders, retail traders, will be selling this market out. Of course, they got a little profit. They got a little bit profit here. And these guys that were selling here, they actually stopped out. Now, where is the liquidity sitting? The liquidity is here. Is here and also there. But don't forget, we haven't taken up these highs. Liquidity is still here. So what happened? Let's see what price did. Eventually, price went up, generated more liquidity. Now, let me quickly point out something. Whenever market gets to a zone and doesn't break it and starts coming down, it's generating liquidity in that zone. See what happened here? You already have a double top here. But when the price eventually moved from this zone, it actually came to this zone and created more liquidity. So some guys are going to be selling from this zone here. They're going to be selling down to this point. So where is the liquidity now? We have some zones here. There's liquidity here, and there's another liquidity here. Some guys entered here. So what did price do? You can see that these guys were stopped out. This was also stopped out. Started going up. Guess what? You have a double bottom here, creating more liquidity, and they ran them out and went back up. And the money is sitting here. Guess what? These guys were taken out. I told you before, when market gets to a zone and it's not able to break it, it creates more liquidity. It came to the zone, took these guys out, but we still have this remaining. These two zones have not been taken out. Guess what? The market came and created more liquidity here, so some persons are buying. These guys got taken out, and the next place you're coming to is right here, where the price is. They got taken out. They've been taken out. So constantly the market is being drawn to where the money is. So if you want to be profitable in the forex market, all you have to do is always spot where is the liquidity. When I get into a chart, the first thing I ask myself is, I use this blue rectangular line to spot where the liquidity is lying. and I always trade towards where the money is sitting. Take for example, a lot of guys are buying here. Some breakout traders are here buying. Let me take this out. Some breakout traders are here buying in this trade. And where will their stop losses be? It will be somewhere here. Say somewhere here. Say 10 pips or 20 pips or thereabout. And guess what? They got stopped out. It got stopped out down to that zone. So I always ask myself, now if I'm to get into this trade here, I should be conscious about something, because this is a double bottom. It's a double bottom. This right here is a double bottom. This should tell me that price is going to be coming down to this zone, because they didn't take out this liquidity that was here. So one is still here. Stop losses are still here. Pending orders are here. Some persons are having buy stop from this zone here. Wonder why someone will be doing that. So persons are having buy stop from this zone here to eventually sell the market to the downside. So stop losses are there, pending orders are there. So market know, the smart money knows that the pending orders are always here, where there is a double bottom, because that's the way retail traders were taught to trade. Whenever you see a double top and a double bottom, that's a strong area for you to start selling or buying. Guys, smart money know this thing, guys. They know what you think, you know how retail traders think. So in order for you to win in the market, you have to think like a smart money. So having double tops, now someone else will be buying from this zone. Someone else might be buying from this zone here. Let me take this out. Someone might be selling out from this zone. Yeah. Let's say place an entry here. Place an entry here. And put a stop loss around here. Of course, they'll be stopped out, because there's no zone to start buying, guys. The market is flow is going up. Price is being drawn. There's liquidity in this zone here. There's liquidity here. So they're going to be taken out. So getting here to look for a sell order is a wrong idea entirely. It's a wrong idea entirely. So price is constantly running towards the money. See what's happening here. See what's happening here. Let me draw this out. It's a double bottom also. Price is, market is here. Liquidity is here. Liquidity is also here. Guess what, guys? If I'm to get into this trade, this is where I'll be looking for an entry. Right here. Yeah. I put my stop loss at least somewhere here. Guys, I got to find out that whenever you trade with the smart money, your risks are always low. Why? Because price is being drawn to the money. And guess what? My target will be somewhere here. My first target will be somewhere here. And the second one will be here. This high. Yeah. This. Because I know this is a double top. See? Guess what? But I've hit my two targets right there. So market is constantly being drawn to the money. And when if I'm to place a trade in this zone here, which happens to be a head and a shoulder, I'll place my entry here, and my first target will be this zone. Because why? Liquidity is resting here. Okay, for guys that doesn't know how to place their take profit, I'll quickly say this. Whenever you want to place a take profit, it's easy for you to do it where there's liquidity, where you know the market is being drawn to. Like I said, Forex market is all about trading towards the money, trading towards where the liquidity is, going towards where the money is. Price is being drawn to it. Okay, price is being drawn to where the money is. A quick one: smart money buys before they sell, or they sell before they buy. Whenever the market wants to go down, take a look at this double top we have here. See what happened? They got run out. Eventually the move is just to take the liquidity that is resting above here, and then what happened? Smart money has bought. They've given themselves the better entry. So if I'm to target, I'll be targeting somewhere here, somewhere here. Sorry, spot it out to this. This will be my target. Will be my target zone. And guess what? If I want to place another entry, I'm going to be targeting this because I see a double bottom here. They eventually took the liquidity here. This was a peak that took the price to the high side. And this. In the future video, I'm going to be talking about candlesticks and how to relate them to market structure. You know, price is always drawn towards where the money is. And also, all this thing you see here, all this peak that actually caused the move up. These are smart money doing this. Now, there's a deep secret I want to reveal to you guys now. Take note, whenever the markets come towards the liquidity, the move is always fast. They always snipe out of that zone very fast. Take for example, see these bullish candles. They are big. They are big. Why? The whole intention of this move was to take out the liquidity that was resting beneath this zone. Resting beneath this zone. Take this out. So immediately they got the liquidity, they just moved up very fast. Same thing here, there was liquidity resting beneath the zone. So price is always creating liquidity at the upside and at the downside. Now, take this little secret. Whenever market takes the liquidity from the top side and fails to take the liquidity from the downside, it means market is about to go the opposite direction. Take for example, they took the liquidity from the generated liquidity from the upside and then ran liquidity to the downside. This should tell you quickly that they're about to go up. Take for example, that's why I told you I was going to buy here, because I know liquidity is resting beneath this zone here. This zone. They've already taken the liquidity from this down. From the down, so that liquidity is left here. Stop losses are here. Retail traders, they were taught how to trade market with double tops, triple tops, and all of that, head and shoulder and all of that. But hey, if you want to win in the game, you have to stay with the big banks. You have to trade with the smart money, because that's the best way for you to win. That's the best way for you to win. I know a lot of guys use trend lines and all of that. See, look what's happening here. There's liquidity here. It got run out. They equally took the liquidity that was here. So the next intention price is coming is towards this direction. What do we see here? We see a lot of liquidities. A lot of liquidities. See what I'm saying? Price ran out liquidity from the downside. From the downside. Right, this is on. But failed to take out the liquidity from the top side. So eventually they know that there are a lot of orders there. So they're going to be coming down to take out the liquidity from the downside and eventually go up, back. So as you can see here, this is the double bottom. It's going to be run out, but don't forget we have liquidity here, and we equally have another liquidity here. Money is sitting here. Stop losses are here. So this is the best way to win, guys. This is the best way to win. Trading with the institution, trading with the retail, trading with the big banks is the best way to win. Retail trading is going to be very stressful when you get to find out that smart money is always drawn to the money, so you also trade towards the money. That's the best way to win. Okay, that's the best way to always win. I get into a trade, the first thing I ask myself is smart money in this trade. Is smart money here? The best way to know that is when they run out liquidity. You see, they generated liquidity here, and also liquidity here. Guess what? They run them out. They run the upside. So what's remaining down here is liquidity. So my first take profit is going to be here, and my second take profit will be here, because well, I know money is still here. So guys, this is how we trade to win always in the forex market. Once you understand that price is being drawn towards the money, you're going to be planning your trade towards where the money is. So I'm going to be dropping a video in the future video for us that talks about candlesticks, smart money, the candlesticks they use, how to identify candlesticks in the forex market that is being used by the smart money in the forex market. So till I come your way again, see you.